Good afternoon, ladies and gentlemen. My name is Liam. Welcome back to the channel. This is Young Money Investing, where we help everybody, no matter how young or how old, achieve true wealth in their lives. Now, it's Sunday afternoon. Markets are opening tomorrow. I know I'm going to be trading. I assume some of you will as well. So I'm going to do a short little technical analysis. Hopefully this brings some clarity and some direction to your trades, and you're not just hopping in blind without any idea what you're doing. So we are going to be focusing on the SPY ETF. This is it's designed to track the performance of the S&P 500, and it's a fairly good proxy. It gets lots of liquidity. Lots of people know it. They like to trade it. Which is why I'm bringing it to you. So, looking at the weekly time frame, some things that kind of immediately jump out to me before we really get into anything. We are rejecting our 50-week moving average, as you can see up here. We have this long wick going up, touching the moving average, and then coming straight back down. This is known as a mallet candle. Because it's shaped like a croquet mallet. We got a nice long handle, and then here's the actual mallet right here. Now on top of that, we've closed very, very, very close to the bottom of our week here. As you can see, the low is 421.22 and the close was 422.14. So less than $1 difference between the actual low and what our close ended up being. That's a very bearish sign. So those two things combined already kind of giving me a bearish viewpoint here. Let's draw some lines. We've got one. We'll make this a zone. Yeah, we'll go here. Located here. And we have this guy coming down. We have this guy going up, and we'll drag you out just a little bit so everybody can see. So, we are currently in a widening wedge here, and what that basically means is that price action is setting lower lows at a faster pace than it is setting lower highs. It means that this bottom part of the channel here is at a steeper angle than the top part of the trend line, which hopefully you guys can see on my drawing. Is narrower towards the beginning, and then it gets increasingly wide. Also, a kind of bearish indicator here, whenever you have a wedge, the direction of the wedge is kind of the direction of the trend. So unless we break out to the upside here and we break this trend line and this 50 weekly average, as well as this zone of interest I've drawn over here, this is just where price action gets a little funky. So coming back to April of last year is the first time we kind of had issues with it. Broke through it, retested in July, retested in October, retested January of this year, once more February of this year before we actually came all the way down to the bottom, rebounded, and then broke it completely during the May-June sell-off. We also had this retest failed towards the end of May. So there's a lot of, action that goes in this zone, which covers roughly 415 to 430. So it's about that $15 region. You get a lot of price action. It acts as support and resistance at various times. Yeah, I would say it's acting more as resistance now. We do have this very nice green candle that put us back into the area, and so we will have to see how price action acts this week after rejecting off. Now, let's say hypothetically we break through the trend line we break through the 50-week average and we break through this zone of interest, there's still this pretty stiff 450, 453 level that we would have to break if we are to continue on to test all-time highs and potentially even above. Personally speaking, this is a personal opinion, this is not financial advice. Please do not buy or sell any security based off of what I'm about to say. I think we are in for more downside. I don't know if this is the bottom back here in June. It might be the bottom, it might not be the bottom, I couldn't tell you. But at least for the short term, at least for the next 2 weeks, 2 months maybe, I think price action is gonna come back down, kind of retest this level, kind of show you right here. I think we kind of come back down, retest this level. There is also this gap from November of 2020 that was never filled. Anytime you have an unfilled gap, it's slightly concerning. Most gaps will fill most of the time. I don't know the actual percentage. I've heard somewhere between 80 and 90%. In my experience, that's fairly accurate. Gap fills are one of my favorite trade setups because they almost always work out in my favor. So that's another thing to keep in mind. And so if we are going to have more downside, I would kind of see where we go this week coming off of here. I would wait till we kind of exit this zone of support before I took any significant positions. Other than that, it would mostly be day trading, trying to catch sharp moves. But if we were to catch more downside from this area, you know, that's about 12%. 12% on a short is not bad, especially as significant as the SPY is. So hopefully that has given you guys some direction on your trades. Hopefully you have a little more clarity. You know what to do this week. Thank you so much for watching. Please like, share, and subscribe, and I will see you guys next time.